What's up to another trade recap? Today we're going to talk about how I made 2.1k on a single trade across 10 accounts. 5 fundeds and 5 evals. 5 fundeds on Top Step and 5 evals on Lucid. So let's just get into it. By the way, I took this on the 50-second time frame, and you have to understand that the price is fractal, and you really can take your higher time frame as the 1 hour or the 5 minute, but you have to align that. It's really time frame alignment. Yeah, I could have taken like my higher time frame as the 1 hour for value gap or something, and pair it with 1 minute entry. But also the same thing, I could take my higher time frame as the 5 minute and pair it with 50-second entry or 3-second entry. You get a point. Let's get into the trade recap and what I took. So, how the market open looked. The market opened right here. We also got an S&P on these tools, but that's not really the main point. It opened inverse these two 50-minute fair value gaps. We have some these highs, yeah, like just straight pump since the market opened. But what really resonated with me, we see these external highs. Yeah, we have not swept them, but created equal highs above them. And really, whenever we have equal highs or equal lows, it's just such a strong confluence and the draw on liquidity to long towards 2 or short towards 2. Basically, price will tap it 99% of the time. Will tap equal highs and equal lows. Okay, so I was looking to take longs, but first I wanted to see some kind of liquidity sweep or fair value gap get tapped, and yeah, we got it. The closest opposing liquidity pool, after even sweeping this buy sell liquidity and creating these equal highs up here, was this 5-minute fair value gap to the upside. So I zoomed in on the 50-second or even the 3-second time frame and waited. We got it tapped, not really a deep tap, but I take it because we also had an S&P on these two lows. And whenever we are seeing this kind of a shallow sweep, we do not really need to wait for another resweep or something, because we have that S&P put in, which is that additional confluence, additional confirmation for that long setup. So the first step of the strategy was done. We tapped the higher time frame. Yeah, like the 5 minutes is my higher time frame right now. I said time frame twice, whatever. We got that second optional step done, which is that S&P to get put in. So I zoomed a bit more. I was looking to take longs. So I looked on the 50-second. We have crazy momentum after sweeping that 5 minute. And I kind of thought that I'm not even gonna get filled. We put in this 50-second fair value gap. I got it marked as inversion, I don't know why. This 50-second fair value gap, and also this 50-second change in state of delivery. I put my buy limit on the 50-second fair value gap and waited. I got a fill. To be honest, I kind of thought that it's just gonna tap the equal highs without me and sweep them. But luckily, I got wicked in. I got filled. When I got filled, I saw this crazy 50-second candle to the downside, but still, I got my stop loss put in, and I was waiting because we have created this small 50-second fair value gap. Whenever we have inverse this small 50-second inversion, fair value gap, and formed an inversion to the upside, it was just that additional bias. Okay, we are going to the upside, and I put my stop loss to the break even just after we have inversed this. Because really, if you're gonna again inverse that inversion, not really high probability of a setup. So, and then what happened? Crazy up movement. Let me even zoom into the 1 second chart and look at that. Literally 53 points or like 55 points in a single up candle. Like from down here to that in a 1 second candle, 55 points. Absolutely crazy, but whatever. And we just sweep those equal highs and got it out of the way. Really simple. You have to understand, if the only thing you can get from this video, just remember that price is fractal. The same way you're trading the 1 hour time frame pair, the 3-minute, 5-minute, 1 minute time frame, is the same as trading the 5 minute as your higher time frame and pairing it with the 3-second, 50-second confirmation, where you look for that entry model to have. But really, the most important thing that was here wasn't really the 5-minute fair value gap or this 50-second fair value gap or inversion, change of state, S&P, nothing of that. The most important thing was those two equal highs above. That's the drawn liquidity, and you always want to trade towards that closest opposing liquidity, which is current drawn liquidity. I've said so many times, like, just focus on drawn liquidity and align your entry model, your whole model with that. So yeah, that's pretty much for me today. Thank you for watching. See you in the next one. Peace.